Hello and welcome back. My name is Mark Williams and joining me is Francois Savary. Francois, hello.
Hello, Mark.
Thank you for joining us. It's nice to see you. I wanted to talk about non-farm payrolls last week that the markets reacted quite badly to, and yet there's been other data that's been very positive. And then after that, I'd like to talk about the Swiss tariffs, which was a bit of a shocker, amongst the highest in the world. And of course, Switzerland was on holiday on Friday, so the markets are waking up to this morning, and we're going to see their reaction this morning. More on that later. Back to America economic data, and the numbers have been very good, generally speaking, and earnings season has been very positive as well. And there's just one number the markets didn't like, and that was non-farm payrolls. Why do you think the market just pounced on that one and decided to sell off the market?
I think this is a shock. This is the first reason. The numbers were poor. The numbers were very poor. And here is also the fact that there was the decision to fire the person who was in charge of the Labor Bureau of Statistics. So this is the combination of those two elements. But when you look at the numbers, at the end of the day, what it's telling you is that the fact that the US economy is creating less jobs than expected is telling you that there is some weakening in the economic activity in the US. And I would not completely agree with you when it comes to all the other numbers were positive. ISM manufacturing and ISM services were not necessarily that great. ISM service is going to be published this week, sorry. But the ISM manufacturing was quite going down. So it means that people reacted. Moreover, you need not to forget that the market has a significant run since the lows of May. And there was all the reason for such quote unquote of a shock to justify some market participant to take some chips out of the market.
Do you think that's justified then? Do you think during this summer lull, we should be taking some of the pressure off from our portfolios?
I think that, usually in August is not necessarily on a seasonal basis, is not particularly strong in terms of equity performance. Usually, August is a difficult month on equity market. It means that, as you mentioned, that you have solid numbers coming from companies, and for the time being, earning per shares have been good, and it's close to 10%, which is higher than what most people were expecting. There is also some revision upwards in terms of what people expect for the coming months. So this bring a kind of positive element into the thing. But nevertheless, when you confront those positive numbers with the non-farm payrolls number and the fact that there was a rise in the unemployment rate, it's something that people will keep in their mind for the coming week. And I think that the market has limited potential to a significant rebound in the very short term, to my point of view.
Is the market even more convinced that interest rates are just around the corner, i.e. September?
Yes, when you look at what happened at the end of last week, it moved from 40% chance to 80% chance of something looming for September, the Fed acting on interest rate at the meeting. And you have also an increase of probability among some investors that maybe it could be a 50 basis point cut and not a 25 basis point cut if they do something. So yes, it has reinforced and the behavior of the bond market when you look at what happened on Friday with the fall in bond yield on the 2 years and 10 years is quite significant, telling you that there is a reappraisal of the potential for rate cut in September.
Therefore, is that what's going to be the reaction for the dollar? The dollar has gone up 2% in the last week or so. Do you think that's as far as the rebound is going to go?
I will tell you, last week you asked me the question about the dollar and the impact of it would have of the tariff looming and etc. And I said, okay, I still remain convinced that what is driving the US dollar is the economy and the interest rates. And I still defend this idea. What you had on Friday is exactly what happened. At the end of the day, when you have such a move on interest rates, when you have economic numbers coming in the wrong direction, when bad news is really bad news in terms of economic development, the US dollar is suffering. I remain with the idea that the US dollar is going to continue to weaken. And I still think that by the end of the year, early next year, you will see the 120 mark on the euro US dollar parity.
In terms of the non-farm payrolls, then eventually everyone is going to be encouraged to set up a factory in the US. How long do you think it would take for the effect of tariffs, if they remain in place, to start to play out in the US economy and therefore start to impact, well, for instance, non-farm payrolls in a positive way?
From my point of view, it's a medium to long-term process. It's something that will take quarters, even not years, to really reorganize the supply chain and to really have some job creation. It's not something that is going to happen in a matter of a few months. That's something that takes a very long time. And you also need to not to forget that there is something that is also looming in the US labor market, because you will have this politic against immigrants in the US impacting the ability of US company, any company that is coming from outside trying to build facility in the US, to have the available labor force to really be able to work, I would say, normally. So this is something that you need to keep in mind. So it's the combination of what is happening with the labor supply, which there is a lot of uncertainty. You have some people who are telling you, the policy on immigration is going to cut the labor force quite significantly, which is going to be something that is going to limit the ability of the US economy to grow. And on the other side, you have this will through tariff to bring the company from outside to produce in the US. It's a difficult balance, and I think it will be quite a long time before we can see something happening in terms of non-farm payrolls.
Switzerland received the news on Friday whilst they were on holiday that the US administration was applying 39% tariffs on all Swiss goods. And that must have been a bit of a shock, because that's amongst the highest in the world.
Mhm.
Presumably, I think the logic is for the Americans that they apply the highest tariffs with the countries that they have the highest trade deficit with. And I'm not quite sure what Switzerland can do to reverse this situation, because they sell lots of things to America and they're high value added goods, but they don't
Yes.
buy that much back, do they?
Okay.
How are the markets going to react? First of all, the markets. How are the markets going to react this morning?
Okay, when you look at the future on the SMI today, it's going to go down by 2.2% at the current time when I look at the number. So it's going to be a strong reaction to the downside. But don't forget that on Friday, European market were also affected and behaved very poorly also. So this is something that we need to see over the day. The Swiss, what can they do? You have different elements. Clearly, the negotiation, and you have some comments that are coming from people on the side that are telling that the negotiation did not particularly went well with the president of the Swiss Confederation and Donald Trump in the last few days. Clearly, the Swiss did not get the key in order to be able to try to find something that was more appropriate in terms of tariff. Clearly, what they can do, they can discuss the issue of investment, Swiss investment in the United States of America. Clearly, when you look at what happened with Japan, with Europe, when they negotiate the deal at 15%, there was clearly some concession on the front of direct investment into the US economy as a way to support their case to get those 15% tariff. Even if you can discuss what it really represents, nevertheless, the 500 billion that were conceded by Japan helped the Japanese authority to get. It seems that in this case, the Swiss had not used significantly this element, and this is maybe a way we can renegotiate, because don't forget that the Swiss have the ability until August the 7th to negotiate and try to find an agreement, and even later. So that's one way. There is another way. It seems that the US would be interested to have some concession in terms of agricultural goods and ability of US goods to come into the Swiss market, which is quite protected. So you have some room of maneuver in order to discuss, but this is limited. To tell you the truth, this is limited. And when it comes to the number, how it is calculated, I still defend the idea that just to get the number, the trade deficit in goods between the US and Swiss, and say, okay, I apply this tariff, is a bit of to me, is absolutely ununderstandable. And this is not something that is logical to my point of view. Especially when you consider that you have also this element, which is the gold exports to the US from the Swiss, which is a transition exports from the Swiss to the US, which is taken into account, which is something which is not really nearly a good. So it is something that is very strange. But nevertheless, this is a strong shock. And the politicians in Switzerland have to find a strategy. It seems that they have not yet. And they need to develop a strategy to get something that is going to be lower, because at the end of the day, it's nearly 19% of Swiss goods that are going into the US. So it's a significant part of the Swiss economy. And there is a last element that you need to take into account is that the pharmaceutical company for the time being are not concerned because the pharmaceutical issue is dealt on a global basis by the US, which send letters to pharmaceutical company. So it could be another blow on that side.
You mentioned the foreign direct investments into the US that are being agreed upon by various countries in order to lower the trade tariffs. How much in total does this make? And is there a limit in time on when these investments need to be made? And the effect on the US economy is going to be huge, surely.
It depends because the way, you need to look for the time being, all those trade deals, we have not seen the detail of the deals. And when you look at, for example, Japan, the Japanese deal, and the fact that it was this 500 billion that were agreed upon supposedly by the two parties, there is disagreement at what it covers. There are a lot of disagreement. When it comes to Europe, to purchase defense, they are going to purchase oil and etc. It's a certain period of time, a few years. And even if you look at the numbers, okay, you can come out with a number, but at the end of the day, the reality is what is the level of the trade of energy between the US and the Europe. And for the time being, when you look at the real number, which is close to 75 billion, it should go to 250 billion. It seems very difficult to reach this level in a matter of few years. So you need to wait for the details of the deals in order to be able to judge what it really means.
Is there anything you're looking forward to this week? You mentioned ISM, I think, earlier on.
I think that ISM is going to come out. You will have also numbers concerning the productivity in the US and the unit labor cost, which is also something that is important with regard to the attitude of the Fed in September. You will have some numbers concerning factory orders, which are going to be very important. In Europe, you have a certain number of statistics concerning industrial production, manufacturing production. It will be interesting to look at those numbers because the ISM number, PMI numbers that were published in Europe over the last few weeks were satisfactory and telling us that there is maybe a turnaround in economic activity that is looming. Not a significant one, but something that could show that the trend is in moving positively. So there are quite a lot of statistics that I will take a look at in Europe and in the US this week. And there is the continuation of the earnings season. You have some big companies reporting, especially pharma. I mentioned pharma earlier, but you will have the numbers coming from Pfizer, for example, and Novo Nordisk, which was a shock also last week with the pre-numbers published telling that it was not going very well. So we will have to take a look at those numbers, what it tells us about the future of Novo Nordisk. So you have McDonald's publishing in the US. It's also something important for the way consumption is behaving in the US. So we will keep an eye on the earning reports this week also.
I think we're expecting oil inventories at the end of the week as well.
Yeah.
Are you expecting? Well, I know OPEC has just announced an increase in production over the weekend, I think.
Yes.
Quite a big increase as well.
Yes.
Are you expecting another influence on oil prices to be what happens on Friday if the US administration imposes secondary sanctions on the countries that are trading with Russia?
Yes, it could have an impact, but more important is the fact that, the economic numbers coming from the US are pointing towards a slowdown. After the rebound of the second quarters, which we all know when we look at the number that were published last week, was showing that the private demand was not going in the right direction. There was some effect of the adjustment on trade of the first quarter and on stocks that had amplified the rebound of the GDP number to 3%. But when you look in details, clearly what tells you is that consumption and investment are not moving in the right direction. Clearly, this is a negative for the oil price. Clearly, if you have an increase in supply by the OPEC plus, it's a negative. So it's more the economic activity plus the decision of OPEC that brings me to believe that the fall of oil price is going to continue.
Francois, I think that's all we've got time for. Thank you very much indeed for all of that. And you have a lovely week.
You are welcome. Bye-bye.
You too. Bye-bye.